John Higgins, Mortgage One. Happy Monday. So, got a big week coming up. The Federal Reserve Open Market Committee is meeting midweek, but let's take a look and see where we were at last week. A little bit of good news, bad news from all the data last week. We had a revision down of 818,000 jobs over the previous 12 months. The market was pretty much braced for a large revision, but I think this one was much larger than the street expected. On the flip side, we did get a pretty benign wholesale inflation number. That's the PPI that ticked down, which was a bit of a surprise. Consumer inflation, the CPI, did actually tick up. So the Fed is trying to hit their two mandates, which is a 2% inflation rate, and we're running a bit above that, and maintaining full employment. And losing 818,000 jobs certainly took the steam out of that, and I think we'll set the Fed up for cutting rates at this meeting for sure. Where does that leave our interest rates? Well, the 10-year Treasury did make a run at 4% off that large revision in the jobs market, but we were turned back. We know that interest rates don't go down in a linear fashion. We kind of make runs at resistance levels. We're below that 420 mark. That took us forever to break that band between 420 and 450. Now we're making a run at 4%. Coming off the Federal Reserve meeting, if there's some very dovish comments by the Fed, maybe we'll actually get below 4% and hold that. Certainly expect a rate cut this week. I will tell you, last year at this time when the Fed made a 50 basis point cut, that kind of ended the party on low mortgage interest rates, and we bounced from something probably at or below 6.5% last year at this time, over 7% again. So even though everyone thinks that the Fed kind of controls interest rates, it really is at the short end of the market, and mortgage rates and longer term Treasury bonds certainly have a mind of their own. So we'll have to watch and see what the Fed says and how the market reacts to their statement. But, the Fed cutting rates usually is a good thing, but, the last couple times they've done it hasn't really helped our mortgage interest rates. Right now, Freddie Mac's market survey puts our 30-year fixed rate at 6.375%. That's another move lower, and we've had several weeks in a row where we've moved lower. That's great for our home buyers. Affordability has always been an issue here with higher home prices and higher interest rates, and hopefully our sellers that are kind of rate locked into their home, as we get closer to 6%, will start thinking about putting their home up for sale. Certainly could use that inventory, which leads me to the marketing program that I run, the Move to Marketing Studio. I want to do everything I can to help you build your business. I put together a fantastic program. It's powered by AI. We've got a great marketing video trailer that can be done in your own voice, audio tours, digital property cards. We'll do social media posts for you. We have an open house that's outstanding in gathering your visitors' names, email addresses, and phone numbers, and much, much more. I'm a big believer that a realtor and a loan officer working together can get much further ahead. And I want to take some of the marketing off your hands so you can get out there and do what you do best, which is prospecting. I'd like to invite you to visit my link above, the bit.ly link. Check out our demo. It's AI powered. There's a way you can chat with Jenny, our AI assistant. You can ask anything about this program, business use cases, how best to implement this into your business. We really are a big believer that AI is going to take over marketing and a lot of what we do. And I want to be there to help you get on the front end of this great wave, find more listings, convert more buyers, build your business. Give me a call with any questions. We'll talk to you next week after the Federal Reserve meeting.